any more trades right now. I'm just watching the market. I'll take a few minutes. I've had a few requests to just to kind of go over the indicators on the toss chart here that we're using. So I'll try to explain them as best I can. Again, one of the things we're looking for is we're looking for institutional strength. So let's go to the stock chart, since SPY is not really a good one for that. This is on Kroger. What we've got is, this is on a 5-minute chart, daily chart, same thing. The information is the same, but you've got this confirmation bar down here. This is a much more of a longer term bar. I don't really use it a lot. The green arrows on the green lines on here and the red lines on here, those are the buy and sell signals from the scanner. This is where they'll appear on this bottom line. But I don't look at that very much as far as my trades are concerned. I mean, if it's green with the other ones, that's good. But it's a much slower to change line. It's more like a bias. This next one up here, this is what's called the Laguerre, the current time frame Laguerre. The Laguerre is an oscillator. Oscillators, by standard definition, track momentum and divergence. This is a modified Laguerre. The divergence has been removed from it, and what it's basically telling us is momentum. And momentum is generally created by institutional buying. The more momentum, the more institutions are in there. The next line up here, this is a fairly critical one. This is the multi-time frame modified Laguerre. This particular line is looking at multiple time frames, 3 different time frames, and it's looking at momentum across those 3 different time frames. If the momentum on all 3 time frames are all bullish, then you're going to get a green multi-time frame Laguerre, which is telling you that basically the stock is likely to go higher. You've got a lot of institutional trading going on at this point, and you're not likely to get a green Laguerre like this without institutions being involved, because it's coming across multiple time frames. This line right here is called the quant. It's a RLT quant line. The quant is a line that's going to tell you, with each stock, like with Kroger, what they've done is they've basically looked at all the stocks that trade in the same direction as Kroger 70% of the time or more. So this could be a lot of stocks, it could be a few stocks, but they try to identify all the stocks that trade with Kroger at 70% of the time. And if most of those stocks are trading with Kroger, they're all green, and those same stocks are also going up, then this is going to be green. So this is telling you that it's not really a sector, it's basically the stocks that trade in the same they correlate with Kroger. So all green obviously gives us a bullish setup. We know we got a lot of institutional buying going on. It's very, very strong. As we move up, this thick green line right here, it's called a 50 EMA of an EMA. That is a smooth 50 exponential moving average. And the reason it's an EMA of an EMA is it tends to smooth out the line. It's not so herky-jerky when you have like a big candle and a small candle, or it doesn't react as quickly to the price movements if there's one outsized move. This little line right here, these 2 little green lines, this is called the C2, and again, this is a line or a set of lines that tells us if we've got momentum and if we've got chop, and how much. And you obviously want, if you're bullish, you want it green. We want everything green. And the wider these lines get apart, the more momentum and the less chop there is. So as the stock moves up, they'll tend to widen. This little shaded area here, if you see there's a line up top, a white line up here, a red line down here, and it's shaded, that's a compression zone, and the stock is compressing when it goes through there. So if you're going to buy a stock or sell a stock, if you're going to short it, and you haven't gotten into the trade, it's best to wait for it to come out of this compression zone and then buy from there, just like Kroger popped out right here. So that's gonna tell you that it's broken out of compression. It's been moving sideways. It moves out of compression. Now it's bullish again. The little thin line, green line right here, that's the 15 EMA of the EMA, which again is a smooth 15 exponential moving average. And when you're bullish, you want to see it green, and you want to see it above the 50. So that you'd like to have the 50 green and the 15 green and the 15 above the 50. That's a bullish setup. It's called market structure. It means that the trend has been bullish, and most likely the institutions are creating this trend. The little green dots here that I talk about, which is these are trend dots. Now trend dots are also indicating momentum and chop, and the strongest setups are typically when these trend dots are obviously green and they get above the 15 exponential moving average. That tends to be a sign of bullishness. If they're moving up toward it, it's also bullish. But what the scan is doing right now is it's identifying any crosses of the trend dots as they cross over 15. Another key thing here is these green dots, these thicker green dots right here. These are called acceleration dots. Acceleration dots identify when the Laguerre, the current time frame Laguerre, is pegged at 100. The Laguerre can only go from 0 to 100. So when you've got accelerations dots like this, that's telling you that you've got the maximum amount of buying going on based on the Laguerre oscillator at that point, the maximum amount of momentum. So as the stock moves up and you keep seeing these thick green dots, that's accelerations dots, which means that you've got a tremendous amount of buying going on right now institutionally in that stock. So when I see these, and people wonder why we're staying in Kroger, that's one of the reasons. We've got green dots above the 15. We've got everything set up green on the daily. We've got acceleration dots, which means the institutions are still in there buying. So can they stop buying? Sure, but you're trading probabilities. We're always trading risk reward and probabilities, and when you have a setup like this, you've got a high probability of follow through on that. So those are most of the lines. The other ones you'll see is the purple dotted lines here. These are called pivot points, and they tend to be resistance and support, but they move as the stock moves higher. If Kroger moves higher today, this pivot point will move higher with it. But when you're trading on a 5-minute chart, you can watch those pivot points, and sometimes it'll stop at them, sometimes it'll go right through. So that's most of there's the pivot point right there. So that's most of the lines I think that are on the chart. One of the big advantages of this compass system is it's really a massive amount of trading data that's being crunched to produce the lines and the colors that you see. It looks real simple when you look at the chart. Oh boy, green's bullish. I can just trade based on that. But you have to understand that the information that's going into creating these particular colored lines and dots and is pretty amazingly complex. If you were trying to do this yourself, it's just not practical. So the best part of the compass system is it can take all that information and present it to us as a trader in a format that makes it really relatively simple for us to make a determination of whether the stock is bullish or bearish, or we don't even want to be in it. I mean, as these colors change, you've got green here, you've got blue, red, and yellow. The meanings of these is when the Laguerre is at between 80 and 100 near the top, and it starts to pull down through that down toward a lower level, this will change to yellow. And then when it gets down below the 20 level, since it goes between 0 and 100, 20 would be considered a bearish type setup on the momentum. In other words, there's not a lot of buying momentum taking place, but you certainly wouldn't short on this stock because your multi-time frame still tells you that it should be long. Your quants tells you that it should be long. Everything else tells you it should be long. This is just telling you that right now you've got an interruption in the momentum or the institutional buying that's causing the stock to go sideways or pull back. And when it changes to blue, it means that it's coming up from 20 toward the 80 to 100 level, and it becomes bullish. So blue can also be bullish. So if you see here how the stock pulled down and kind of went sideways, and this went yellow, green, yellow, red. Basically, the institutional buying momentum was coming out, but here it comes back in again. It goes blue, it goes green. You see what happens to the stock price when it went from red to blue to green. This is the institutions. They've stepped out, they step back in again, and this is what traps a lot of traders right here. When they see a stock like Kroger pulling back on the daily, and they see these candlesticks, they short the stock. What they don't understand is they're shorting the stock, but the institutions are not shorting it with them. They're basically just stepped back. They have a bullish setup that the institutions have created. So when if you short this, you get trapped in there. And then when the institutions come back in again, like they did here on the blue and here on the green, you're stuck. And these are retail traders trying to do counter trend trading. And counter trend trading is extremely dangerous because counter trend, for me, means you're trading against the institutional trend that's been created. So that's why this compass system can be so effective, and why it's pretty easy to use. I mean, you have to look at other things as support and resistance levels, and when is earnings, and a lot of those other kind of technical information that goes into a decision. But the point is, you can look at, I can teach anybody who's even new to trading to look at this. I mean, green is bullish, red is bearish. It really uncomplicates the process, which helps to speed up the learning curve for people who are trying to learn how to trade. I hope that's a clear explanation.